Hi all, welcome to Diversified Finance. My name is Lakal. This is the uh, weekly traditional markets and cryptocurrency watch. As we know, things are not looking good at the moment. Two reasons. The main reason is the Fed has mentioned that they're going to increase interest rate aggressively in 2022, and the second reason is being the war drums that they're playing over in Russia, and seems like Russia, as per what they said, Russia will probably attack Ukraine in couple of days or so, according to what Biden said. So there's a lot of fear in the market. If there's a war in between Russia and Ukraine, we will see further downside for the market. Or this could be a fake out, right? All of a sudden, they might come out and say things are looking good, everything's fine, no need to worry about Ukraine. They uh, looks like they're not gonna go for a war, right? So we are not too sure, but uh, Nasdaq is not looking good. So as you can see, if Nasdaq breaks below 13,000, right, then it'll probably make a new lower low, right, and then we don't know how far down it's gonna go, right. That's for Nasdaq, and same with Dow Jones, and Dow Jones not looking good either. Compared to Nasdaq, Dow Jones is quite similar actually if you're looking at the charts. RSI for Dow Jones for the 4 hour, it's about like 30, somewhere near oversold levels. If you look at the daily chart, uh, RSI is dropped to like 37. So we are near oversold levels. And recently, I found this new indicator. It's called fear and greed. So as you can see here, so this one has three lines. This is the upper line, mid line, and the lower line. So now we are at fear, right? It could go down to extreme fear as well. So looks like a lot of fear in the market. So we maybe see a capitulation event where we see uh, it depends on what kind of news going to come out from Russia, and then if Federal Reserve keep on if they aggressively increase interest rates in 2022, the market will go down a lot further. And there's a upcoming Federal Reserve meeting on like mid March or so. So we'll probably have a better idea when we get closer to it. But for the month of January, like December to January, market has already priced in interest rate hikes, like few interest rate hikes for this year. But this new uh, war news, between Russia and Ukraine, has escalated, things a little bit towards downside, right? So there's a lot of uncertainty because of the war. Otherwise, my market would have consolidated for some time, and we could have seen like it's gone up a little bit, lot higher. But because of the war, I think there's so much uncertainty in the market, and nobody likes uncertainty. And if we see sort of uncertainty, we tend to see a lot of red candles, for Dow Jones, traditional markets, even for cryptocurrencies. But as we know, gold and silver has been doing up pretty well. Like specifically, gold has gone up compared to silver. So gold is doing really well. So this is why we all mention all the time, right? We need to have a diversified portfolio. We cannot put like all our money into cryptocurrency and expect gains out of that. So it's always wise when you take profit out from currencies that we go into other asset classes like gold and silver. Yes, but you're not gonna get much uh, percentage gains compared to share market or cryptocurrencies from gold. But this is the real money, right? You can buy it and hold it, and if it's not gonna go up so much, but still it will retain your value, right? When they keep on printing money, this gold and silver will retain your money. So in the future, when you take profit from cryptocurrencies, right, and if you're willing to put money into any of these asset classes, make sure it's very important that we have a diversified portfolio, right? Maybe 30-40%, 30% into cryptocurrencies, another 30% into share market, another 30 to 40%, 30% in gold and silver, and another 10% in CFDs or government bonds or likewise. So it's very important that we have a diversified asset portfolio. If you had a diversified portfolio right now, even though the cryptocurrency is not doing really well, gold is picking up really well, right? It's performing better compared to share markets and other uh, cryptocurrencies, right? It's outperforming share market and cryptocurrencies. So that's why, even though these two asset classes could go down in value, gold will pick up, and then it'll help you to maintain your portfolio at a certain price limit, right? Might not go down by even though the cryptocurrency goes down. Let's say cryptocurrency will go down by say 50%, but gold goes up by 25 or 30%. Your overall portfolio would be down only about like 20%, right? Or 10%, because gold has helped you to recover the losses that you got from other asset classes like traditional markets and cryptocurrencies, right? So that's why the, there's a reason why we named our channel Diversified Finance. It's all about having a diversified asset portfolio where you spread your money across few asset classes just to reduce risk. This is why we do that. Okay, so that's Dow Jones and uh, Nasdaq. Gold and silver, we discussed this a few times. When this price has gone up a lot higher, and that'll be like a good time for us to buy silver. But when it's down, it's a good time for us to buy gold, because this is gold versus silver, right? Gold slash silver ratio, gold versus silver ratio. So when silver goes higher, right, we tend to see low prices for this chart. When gold goes higher compared to silver, we tend to see means higher prices on the chart. So silver goes higher, we see low prices. So when we see RSI at low prices, that's a good time for us to buy uh, um, silver. When the price goes higher, it's a good time for us to buy gold. So this is how we use this chart. We can go have a look at the weekly chart for gold and silver. Yeah, so as you can see here, this is the weekly chart. So this would have been like a really good opportunity for us to buy silver. Like, the price went up so high. That means silver price went up so high. Gold versus silver. Yeah, so this would have been a good time for us to buy silver, because silver price went down so much. When this price is so gone higher, that means gold price, silver price has gone down a lot lower, right? So when the price is high, it's a good time for us to buy silver. The price is low at these levels, it's a good time for us to buy gold, because this is gold over silver. Yeah, so as I mentioned earlier, don't forget about physical assets. Like, I'm not saying about paper gold or paper silver in your portfolio. You should allocate maybe 10 to 20% for physical gold and silver, where you buy gold and silver and keep it in a locker or something like that. So it's part of your portfolio, part of your diversified portfolio, and it's something really important. So that's gold and silver. Okay, so let's quickly look at the Bitcoin price right now. So right now, Bitcoin is going down, right? It's not looking good at the moment. As you can see, it just broke below this 40,000, and it dropped all the way to 38,000, and now it seems as if it's found a little bit of support around 38,000. But we have to wait and see, right? Maybe when Nasdaq opens tomorrow, Monday morning, so we will see for the downside if Nasdaq drops further. If the traditional market goes a lot lower, we'll drag Bitcoin down with it. So we might see like a capitulation event, and that's what we're waiting for, where with low volume. Even this one, there's not much volume. So we would like to see a capitulation event, like where we see like a massive red candle. Uh, for example, if we go back uh, to like December 4th, yeah, so something similar to this, right? Look at this candle, like this red candle, massive red candle with a massive wick, and we've seen like so much volume. So we want to see a similar capitulation. We can call it a capitulation. Capitulation is where we see like that's the bottom of a bear market, where we see a lot of selling pressure and a panic. People are panicking and selling. A lot of people are selling at the same time, and we would like to see a bigger volume, red volume candle, something like bigger, like goes up all the way up here, right? We want to see something like that. If you see that, and then at the same time Bitcoin drops to like maybe 30K, 29K, and quickly recovers, then we know this could be a capitulation. But let's not forget, 200 weekly moving average for Bitcoin is somewhere near 20K, and 300 weekly moving average for Bitcoin is somewhere near 14K. I'm not gonna say it's gonna go there, but if we see there's a lot of uncertainty, war against Ukraine and Russia, and if Fed keeps on scaring us, scaring people, saying we're going to aggressively increase interest rate, there's a possibility we could go all the way down to 200 week moving average. And 200 week moving average right now is somewhere near 20K, right? But if it get there, right, let's not forget that'll be one of the best buying opportunities in our lives, right? You're never gonna get a chance where you could get uh, you can buy Bitcoin at 200 weekly moving average. So for example, let me just show that to you. Let me just bring up the 200 weekly moving average. Yeah. So if you look at it right here, right now, yeah, this is the 200 weekly moving average. So right now it's somewhere near 19,906. Let's say it's uh, at 20K. And let me just go have a look at a different Bitcoin chart where we can see more, where we would be able to see more data. Yeah, this one here. So I think I've mentioned this last time. See, like there's numerous times we went back down to like retest this 200 weekly moving average, and last time we tested this week 200 weekly moving average is 2020 March. So basically 2 years ago, almost 2 years ago. So that's why I believe there's a higher probability, right? If he keeps on seeing these red candles, a lot of uncertainty around the world, there's a higher probability that Bitcoin could come back down to this 200 weekly moving average to retest before it goes a lot higher, right? It could happen if everybody expect Bitcoin to come back, come can if everyone expect Bitcoin to go to 20K, right? Then it might not happen, right? Then it might drop to only 25K and quickly recovers and could go back up a lot higher, or 29K could go drop to 29K and we'll see like a reversal and could go a lot higher. So we have to wait and see. Things are not looking bullish at the moment, but let's not forget this is the perfect time for us. This is something special for us, right? Because we know we can DCA. Like how to DCA? Let's say you have 10,000 right now and you plan to invest 10,000 in Bitcoin and cryptocurrencies. You can invest maybe 40% of that right now. And if Bitcoin goes further, Bitcoin comes back down to 30K, you can add another maybe 20%. And if Bitcoin goes to 25K, you can add another 20%. So likewise, along the way down, if Bitcoin keeps on going down, we just dollar cost average uh, with the money that you plan to invest, right? The worst thing we can do is put all our money right now, buy Bitcoin right now, and expect it's the bottom, right? But if not, if it keeps on dropping lower, then you wouldn't have any money to get back in at lower prices. So DCA, dollar cost average buy, is a very something important we can do. And right now, a lot of altcoins are down as well. So we can add Bitcoin, Ethereum, plus few altcoins like to our portfolio, and we have a diversified crypto portfolio, so that when market recovers and goes higher, we can make a lot of money, a lot of money in the future. And even looking at the weekly fear and greed is kind of neutral, but if you go to daily uh, chart, we can see it says uber fear, so that's like extreme fear, and it has gone down below the lower uh, fear band, right? So we are at extreme fear. So this is a good opportunity for us to DCA for long term, right? No, I'm not saying asking to buy everything that you have. You buy everything, put all your money and buy Bitcoin right now, but rather it's a pretty good time for us to DCA, dollar cost average, for long term. And a stochastic RSI is kind of like exhausted, like it has to come back and go a lot higher. That means that we don't have much lot of momentum towards downside right now, so we might see it consolidate here for some time, but still there's a high chance it could go a lot lower, right? So we should be prepared for any kind of scenario right now. DCA buy is the best way to go at the moment. And let's look at the super trend. We look at the super trend, we still have a buy here, right? So it's still, according to the super trend, we are still on an uptrend, right? So we had to wait and see. But tomorrow also, if you see like a red candle below uh, around like 37 or 35,000 or so, I think we'll see like a sell candle on the top, just like over here, right? So that's why we had to wait and see. Uh, don't like try to buy Bitcoin at the bottom, or don't expect Bitcoin to come to 20K or so. Rather than that, it can happen, but if it's not going to happen, then you're going to miss out, like buying Bitcoin and other cryptocurrencies at cheap levels, right? So what we do, we keep on DCing. We can keep on DCing. Yeah, so that's it from my end. So let's wait and see. If someone wants to DCA for long term, this is not a bad time. If you're planning to invest 10%, $10,000, you can invest maybe 10, 20,000, and then get into the market and wait and see what will happen. And before I go, none of this is financial advice. I'm not your financial advisor. So do not buy, sell, or hold or any cryptocurrencies or any assets, any shares or anything like that, gold and silver, just because I said so, because I could be 100% wrong. Thank you, guys. And I see you guys on next Wednesday. Bye.